Hello, Right Club. Welcome to the Right Bites. So I'm really excited today to have none other than Claire Drage from the Windrose group. And I got a lovely email yesterday from Claire and about interest rates. So that was some good news. I was starting to lose sleep, but you still need to be prepared. So Claire, can you tell us more about what's going on in the mortgage world and interest rates and things?
Definitely. Thank you so much. It's very interesting times. I think all of us had a big sigh of relief that the Bank of Canada didn't increase their overnight rates yesterday. But I think what it has done for a lot of people is highlighted the fact that we need to really think that this is coming down the road. And
Yeah.
so how can we we've got a bit of a reprieve. It might only be a 6 to 8 week reprieve before the Bank of Canada will start to increase rates. And I know I've spent quite a lot of time calming my clients down for them not to panic, but also at the same time, a bit of planning and a bit of a reality check. I'll be really honest with you, because when we read in the news, rates are going up. Everyone's thinking, oh my gosh, my rate's going to double. It's going to
Yeah,
go
go
from
to 20% and
to 4 or whatever. So the first thing I want to say is when the Bank of Canada says they're going to increase rates, since 1992, they've only ever increased the rate by an increment of 0.25% on any one of their 8 fixed announcement dates per
oh
year.
wow.
So we always know exactly when the next announcement date is, and if they're going to increase it, it's going to be by 0.25%. And they usually will miss an announcement before they do the next one because they need a 60 to 90-day lag to see if there was any negative impacts to the rate hike, because any rate hike will impact variable rate mortgages and lines of credit. And, so I've been saying to a lot of people, don't panic, do the math. Really,
Yeah,
that's been my slogan. If your line of credit goes up by 0.25%, that's probably about $4 a month for every $100,000 you own it.
the one Starbucks, that's not too bad.
Is it really that much of an increase? So don't panic, but prepare, plan and prepare. The 3 Ps, I guess. And so, prepare for those potential rate increases. Let's face it, mortgages have been pretty much, and lines of credit have been pretty much free for the last 15 years, really.
Almost.
So low. We really got to get used to the fact that this isn't normal. And the sad thing is there's been like a whole generation of people that have never known interest rates above 3-4%. But it's going to come. It has to. So plan. If you're a first-time home buyer or you're wanting to purchase a property, you can get 4-month rate holds. Not necessarily applicable on rental properties because there's too many variables.
Yeah.
But if you're worried that rates are going to go through the roof, which they're not, they're going to incrementally increase over the coming years. Just plan and be prepared and see what it really impacts. How does it really impact you?
That's really cool.
I guarantee it.
And so your team is able to help investors and those panicking or not panicking, just being wise about it to prepare. So what would be preparing? So yeah, do the math. Can
Yeah.
you lock in rates? Are there ways that, let's say you have a transaction coming up soon? Are there things that investors should do?
Definitely. So I think you've got to really look at everyone's scenario is different. So don't listen to everyone else's opinion.
Nope.
Try to look at your situation. If you have a variable rate mortgage and you're at prime -1, so you've got a super low interest rate right now. What's the difference if you converted to a fixed term? Versus, so if converting to a fixed term means your rate's going to go up by 0.75%, well, it could take a year for your variable to get that high.
Yeah.
So do you make the most of the savings and actually put the difference aside? Or if you're in for the long-term gain and you want to lock in for the next 5 years because you're going to hold that investment property, it could be worth looking at. But we've got to do the math because an increase in your payment is going to impact your cash flow. And, but I'll be honest with you, this might come across terrible, but if a 0.25% increase in your interest payments is going to negatively impact your portfolio, you may need to reconsider. I think you have a bigger problem.
I think so too.
you know, or $100 or even 200. So it's come back a lot to, we've really been looking at, okay, where is the, if you can, control the expenses and increase the income. So if $100 in your mortgage payment or line of credit payment you use for the down payment, how do you balance that out? So could you put in washer dryers? Could you rent, the roof or the side of the building for signage? Like,
Yeah.
how can you replace that if it causes that much financial strain? But honestly, I would say everyone is different. Plan accordingly. And if, a small increase is going to break you, you probably have bigger problems.
Yeah, you've been at banking on appreciation or buying with really slim margins, and yeah, so be ready to support those properties. One really nice side to an increase that I thought about, and you could probably tell me if I'm right or wrong, but a lot of mortgages, if you're trying to get out of a mortgage, and usually when you break it, your interest rate, I don't know, is at 2, and now it's 3. It's the mortgage differential. So now it's only 3 months interest depending on your contract. So to some people, this could be advantageous, possibly. I mean, I've experienced that a few times and paid the big penalty. Now it's like, yay, I can get out of it.
You know what? You're right. It's a great chance if you're thinking about, do I liquidate? And I think for investors, a lot of, because I mean, the good thing in the current market is if you own real estate, it's gone up in value like crazy,
Oh,
crazy.
yeah.
And, I've spoken to a lot of investors about, okay, an increase in your borrowing is going to impact your cash flow. You bought for cash flow. Maybe you need to reconsider, consider selling. And a lot of investors go, oh my God, I'm not going to sell. That's failing. That's bad. I'm like, no. You're just redeploying your
That's
capital.
it.
If you've got $500,000 stuck in that property and a rate hike or higher expenses and no income increasing because of rent control, it's going to cause you negative cash flow. Take that $500,000 and maybe you become a private lender. Maybe you buy a larger multifamily building. You're just redeploying your capital into income generating avenues instead. So I always say to people, don't be frightened of selling. It's not bad. Like right now,
No.
it feels like you win the lottery when you sell.
Well, that's it. It's part of the investor cycle. And that's a conversation we need to have more, Claire. Great topic, when to sell. And I think that's something you mentioned and you will be mentioning in the future, but when to sell. And I've done that this summer. I've sold a few places and I wish the mortgage rates were going up because I would have saved on some penalties. But anyway, that's why
Did
you
you
get
still make some
variable
money?
rate.
Did you still make some money?
Oh, tons, like
Yeah.
crazy. So I really don't care. It's actually probably good to have that penalty to offset capital gains, and it's not all bad. So look onto the bright side and make sure to call the Windrose group. So what's the best way to reach someone on your team? I love your answering system as well. If you want to give us your phone number or website or.
Thank you so much, Francois. So info@thewindrosegroup.ca. You can call our main number. I have some amazing staff. We like human beings to pick up the phone. So Andrew will be able to redirect your call to the right person. And our number is 289-800-9620.
Excellent. And yes, your team is amazing, very caring, and like consulting. I mean, you can really, it's like going to psychotherapy. You can put it all out, air it out, and then you'll have a plan and like a plan forward as well. So this is excellent news for investors. And thank you so much for your time.
Thank you. It's been such a pleasure.
My pleasure. See you around.
And you, bye.
At the next hike, the next announcement, maybe. Cheers.